When I first went freelance, nobody told me I was starting the financial equivalent of a high-wire act without a safety net. No employer, no pension, no sick pay, no one automatically putting money aside for my future. Just me, my skills, and the terrifying freedom to either build real wealth or wake up at 65 with nothing. So I did the math, and what I found changed everything about how I think about freelance income. Here's what most freelancers do with their money. They earn, they spend, they mean to save, they don't. They earn more. They lifestyle inflate, they still don't save enough. And then one day they look up and realize their peers with corporate jobs have 401k matches, pension contributions, and 20 years of automated saving behind them. The freelancer has skills, hustle, and a surprisingly thin retirement account. This is not about discipline. This is about not having a system. Employees have one built for them. Freelancers have to build their own. Today, I am going to show you exactly what that system looks like, step by step. If I were starting from zero in 2026, with nothing but a freelance income and the ambition to build $500,000 in net wealth. Why $500K and why it is achievable? First, why $500,000? Because using the rule of 25, $500,000 in invested assets generates approximately $20,000 per year in passive income at a 4% safe withdrawal rate. That is not a full retirement on its own, but combined with Social Security, a paid-off home, or reduced freelance work in later years, $500,000 is the milestone that transforms financial anxiety into financial options. And here's the most important thing. $500,000 is achievable for almost any freelancer, regardless of income level, if they start the right system early enough. A 30-year-old freelancer saving $700 per month at a 7% average annual return reaches $500,000 by age 55. That is 25 years. A 35-year-old saving $1,100 per month reaches $500,000 by age 55. That is 20 years. The system gets there. You just have to run it. Step 1. Protect the foundation first. If I were starting from zero today, the very first thing I would do, before opening a single investment account, is build a $10,000 cash buffer in a high-yield savings account. Not $1,000, not 3 months of expenses. $10,000 flat. A clear, simple, psychologically powerful number. Here is why this specific step comes first. Without a cash buffer, every market dip becomes a temptation to sell investments at a loss. Every slow client month becomes a reason to raid your retirement account. Every unexpected expense becomes a financial crisis that derails your entire plan. The $10,000 buffer is not an investment. It earns 4 to 5% in a HYSA and sits there doing almost nothing until everything goes wrong. And then it does everything. In 2026, I would open a Marcus by Goldman Sachs or Ally bank account today, name it emergency fund, automate $500 per month into it, and not touch it until it hits $10,000. Time to complete at $500 per month. 20 months. While building it, invest nothing else. Just focus here first. Step 2. Open the right retirement account immediately. The moment I hit $10,000 in my emergency fund, I would open a solo 401k at Fidelity the same week. Not a SEP IRA. Not a regular brokerage account. A solo 401k. Here is why. In 2026, a solo 401k lets me contribute up to $2,400 as the employee portion, regardless of what percentage of my income that represents. The SEP IRA only allows 25% of net income, which at a $50,000 income level limits me to roughly $9,300. I am leaving $15,000 of tax advantage space on the table with a SEP IRA at that income level. Every dollar I put into the solo 401k reduces my taxable income by $1. At a 22% combined federal rate, each $1,000 I contribute is effectively co-funded $370 by the IRS. My retirement account grows, and my tax bill shrinks simultaneously. Inside the solo 401k, I would invest 100% in a single fund, the Vanguard Total Stock Market Index Fund, or its equivalent, expense ratio 0.03%, and not touch it for 20 to 30 years. One account, one fund, total autopilot. That is the power move. Step 3. The 20-30-50 Income Allocation System. Now we get to the core engine. The system that actually builds the $500,000. Every time money hits my freelance account, I immediately split it using the 20-30-50 rule. 20% goes to taxes. As a freelancer, I owe self-employment tax plus income tax. 20% of gross income held in a separate savings account covers this in almost all scenarios under $100,000 annual income. I never touch this money until quarterly estimated tax payments are due. 30% goes to wealth building. This is split between my solo 401k contribution, maxing it out as fast as possible, and once maxed, into a Roth IRA, and then into a taxable brokerage account. 50% covers everything else: living expenses, business costs, discretionary spending, fun, everything. This allocation runs automatically. The transfers are set up on the day I invoice. Before I spend $1 on anything else, 20% and 30% are already gone. This is the single most important habit change any freelancer can make. Paying yourself and the taxman first is not budgeting. It is financial architecture. Step 4. The income ladder. Here is the strategy most freelancers overlook, and it is the one that accelerates the path to $500,000 the most dramatically. I call it the income ladder. Every time I increase my freelance income by $1,000 per month, I commit 50% of that increase to wealth building. The other 50% I keep for lifestyle improvement. So when I go from earning $5,000 per month to $6,000 per month, $500 of that extra $1,000 goes directly to my solo 401k or investment account. My lifestyle improves modestly. My wealth accelerates significantly. This works because lifestyle inflation is the silent wealth killer for freelancers. Income doubles, spending doubles. Net worth stays flat. The income ladder interrupts this pattern by systematically redirecting income growth before spending habits can absorb it. Here is what the income ladder looks like in practice. At $5,000 per month, investing $750 per month. Retirement account hits $500K in 29 years. At $7,000 per month, investing $1,500 per month. Retirement account hits $500K in 21 years. At $10,000 per month, investing $2,500 per month. Retirement account hits $500K in 16 years. Every income increase shortens the timeline. The ladder turns every client rate increase and every new project into accelerated financial freedom. Step 5. The tax strategy that funds the whole system. Here's the part most freelancers miss, and it is worth thousands of dollars per year. Every year at tax time, I would stack 3 legal deductions that compound each other. Deduction 1, the solo 401k contribution. At $70,000 annual income, contributing $20,000 reduces my taxable income by $20,000, saving approximately $7,400 in combined federal and self-employment taxes. Deduction 2, the self-employment tax deduction. I automatically deduct 50% of my SE tax from gross income. On $70,000 income, this saves approximately $1,000 in income tax. Deduction 3, the QBI deduction. The qualified business income deduction gives me up to 20% off my net business income. On a reduced taxable income after retirement contributions, this saves another $2,000 to $3,000. Total annual tax saving from these 3 deductions alone, approximately $10,000 to $12,000. Now here is the compounding move. I take that $10,000 tax saving, which I would have paid to the IRS, and invest it directly into my Roth IRA and taxable brokerage account. My tax savings fund my investments. The government is co-funding my path to $500,000 every single year. What $500K actually looks like over time. Let me make this concrete with a real projection. Meet Jordan, 32-year-old freelance writer, earning $72,000 per year, $6,000 per month, living in a mid-cost city, starting from zero. Month 1. Opens emergency fund, HYSA. Automates $500 per month. Month 20. Emergency fund hits $10,000. Opens solo 401k at Fidelity. Starts contributing $1,200 per month. The 20% wealth building allocation on $6,000 income. Year 3. Solo 401k balance, approximately $47,000. Raises rates to $80,000 per year. Increases investment to $1,600 per month using the income ladder rule. Year 5. Solo 401k balance approximately $115,000. Also opens Roth IRA. Now investing total of $1,900 per month across both accounts. Year 10. Combined retirement account balance approximately $310,000. Jordan increases freelance income to $100,000 through new clients and rate increases. Year 15. Combined balance approximately $570,000. Jordan has crossed $500,000 at age 47, 15 years from zero to $500,000, on a freelance income that started at $72,000 per year. No inheritance, no lucky investment, no lottery ticket, just a system run consistently. The 3 mindset shifts that make this work. The numbers work mathematically, but mathematics is not what stops most freelancers. Mindset is. Here are the 3 mindset shifts that separate freelancers who build wealth from those who stay stuck. Shift 1. From "I'll save what's left over" to "I invest first and live on the rest." There is never anything left over. There will always be a reason not to save. Automate the investment first and adapt your spending to what remains. Shift 2. From "I need to earn more before I start" to "The system I build today scales with my income." A freelancer who starts investing $300 per month at 28 will outperform a freelancer who waits until 35 and invests $800 per month. Starting small and early always beats starting big and late. Shift 3. From "The market is scary right now" to "Every month I invest is a month of compounding I can never get back." Market timing is a game almost no one wins. Consistent monthly investing through every market condition, bull, bear, crash, recovery, is what actually builds wealth over decades. Your first 30 days. Exactly what to do. Here is your action plan for the next 30 days. Not next year, not next month. This month. Day 1. Calculate your current monthly essential expenses. Write down the number. Day 3. Open a high-yield savings account at Marcus, Ally, or SoFi. Name it Emergency Fund. Set up an automatic transfer of whatever you can manage, even $200 per month, starting next payday. Day 7. Research solo 401k account opening at Fidelity, Vanguard, or Schwab. All 3 are free to open. Note the December 31st setup deadline. Day 14. Set up the 20-30-50 split. Create a separate savings account for taxes if you do not have one. Calculate 20% of your average monthly income and begin holding it there. Day 30. Review your freelance rate. Is your current rate funding the system? If not, what would you need to charge to hit the 30% wealth building allocation? Set a target for your next rate increase. The plan does not require a perfect income. It requires a decision. What changes when you hit 500K? Let me close with something most finance videos never talk about. What actually changes when you cross the $500,000 threshold? It is not the number itself, it is what the number represents. At $500,000 invested, at a 7% average return, your portfolio generates approximately $35,000 per year in growth, without you doing anything. Your money is now working harder than a part-time job, without invoices, without clients, without your time. For the first time, your financial future is no longer entirely dependent on your ability to keep winning freelance work. You have built an engine that runs independently of your daily hustle. That is not just financial security, that is freedom. The same freedom that brought most of us to freelancing in the first place, now applied to our financial lives too. If this video gave you clarity on what your system should look like, not just information, but an actual plan, I want to ask one thing. Share this with one freelancer in your network who you think needs to see it. Not as advice, just as something that helped you. That one share could genuinely change someone's financial trajectory. Drop a comment below and tell me, what stage are you at right now? Stage 1, building the emergency fund? Stage 2, first retirement account open? Stage 3, running the full system? I read every comment. And if you want to go deeper, check out our full playlist on retirement accounts, tax strategy, and investing built specifically for freelancers. Subscribe to Freelancer Retirement Lab. New video every Tuesday and Thursday. See you in the next video.